While the world was glued to the political drama of the government shutdown, a much bigger story was unfolding in the world of finance. A deep crack has appeared in the foundation of investor trust, and it's quietly fueling a new future for Bitcoin. What if I told you the real story of the shutdown wasn't just the temporary chaos, but a fundamental reset in how we think about money? This isn't just about a price chart. This is about a seismic shift in the financial landscape. We're going to break down exactly what happened behind the scenes, why the old rules might not apply anymore, and what this Bitcoin reset could mean for your wealth. When a government shuts down, you know the drill. We hear about political gridlock, furloughed workers, and closed national parks. It's always presented as a short term drama that'll blow over once the politicians strike a deal. For decades, markets have mostly treated these events as background noise, assuming their impact would be brief. But what if that assumption is now dangerously outdated? What we just witnessed wasn't just another budget fight, it was a symptom of a deeper fragility in the system. Prolonged shutdowns do more than just pause government services, they inject a level of chaos risk that investors are now forced to take seriously. Confidence in the system's basic ability to function begins to erode. For finance pros and regular investors alike, this isn't just political theater, it's a real world liquidity and confidence crisis. While the news focused on the partisan blame game, the real story was happening in the plumbing of the financial system. And that's where the first hidden impact on Bitcoin started to take shape, not as a boom, but as a squeeze. You might think that chaos in Washington would be instantly good for Bitcoin, but the immediate effect can be the exact opposite. To understand why, you need to know about a powerful government account called the Treasury General Account, or TGA. Think of the TGA as the government's main checking account held at the Federal Reserve. During a shutdown, the government slashes its spending. At the same time, money from taxes keeps rolling in. This causes the TGA's balance to swell, and during the 2025 shutdown, it ballooned from around $300 billion to over $1 trillion. This effectively sucked over $700 billion in liquidity out of the private financial system. That's cash that's no longer circulating in the markets to fund investments in assets like stocks or crypto. Bitcoin is incredibly sensitive to these huge shifts in liquidity. When cash gets tight, it puts downward pressure on risk assets. So while many expected Bitcoin to soar on the chaos, it first had to survive a massive structural tightening of US dollar liquidity. It was a liquidity vacuum with simply less cash sloshing around for speculation. This is the first part of the reset. Bitcoin doesn't operate in a bubble. It's connected to these giant systemic cash flows. But that drain was just the beginning. The second, more lasting effect was just starting to unfold. The true long term impact of a government shutdown isn't just economic, it's psychological. It's a very public demonstration of systemic dysfunction. For investors big and small, it's a harsh reminder that the traditional financial system is built on trust in government, a trust that is looking increasingly shaky. Remember, Bitcoin was born from the ashes of the 2008 financial crisis, designed as an alternative to a system that appeared broken. Its entire value proposition is decentralization and a predictable supply. It's a system run by code, not by politicians who can't agree on a budget. For years, that was a pretty niche idea. But with each new crisis, that idea moves closer to the mainstream. A long shutdown works like a powerful advertisement for a non sovereign, decentralized store of value. It forces every investor to ask a critical question. If the government can't even perform its most basic functions, how much can I trust the currency it issues to hold its value over the long run? This erosion of confidence is the real story. While the TGA was creating a temporary cash crunch, the shutdown was simultaneously building long-term demand for an alternative. A growing number of investors are looking for a hedge against bad governance, and Bitcoin is built for that exact purpose. People are starting to see it as not just a speculative bet, but as a potentially necessary part of a portfolio in an era of growing uncertainty. Navigating this new landscape requires the right tools. If you're looking to build your position in this new crypto future, I use and recommend trading platform Name. They have a super clean interface, low fees, and the security you need to invest with confidence. There's a link in the description below where you can get a bonus for signing up. Check it out after this video. So, what happens when a shutdown finally ends? The whole process that created the liquidity drain reverses, but with a vengeance. The government reopens, and the Treasury unleashes the funds it had been hoarding in the TGA. Federal back pay gets sent out, government contracts are paid, and a flood of spending hits the economy. This isn't a trickle, it's a tsunami of liquidity. And historically, this moment has been incredibly bullish for risk assets. Just look at the 35-day shutdown in 2018 to 2019. After it ended, Bitcoin went on a monster rally, surging nearly 300% in the following 5 months, from around $3,500 to nearly $14,000. This brings us to the Bitcoin reset. The new wave of liquidity is now pouring into a market that has fundamentally changed its perception of Bitcoin. It's not just another risk on asset anymore. It's now viewed by a growing slice of the market as a potential safe haven from the very instability everyone just witnessed. So you have two powerful forces converging: a massive mechanical injection of cash from the TGA drawdown, a serious psychological shift in investor trust away from legacy systems and toward decentralized alternatives. The shutdown forced investors to look at the fragility of the status quo. The end of the shutdown gives them the fuel to act on that new perspective. The combination of these two factors could create a much stronger trajectory for Bitcoin than we've seen in past cycles. The end of the shutdown doesn't just put us back to where we were, it marks the start of a new chapter. The political gridlock also slowed regulatory progress to a crawl, as agencies like the SEC and CFTC had their operations disrupted. This delayed important conversations around a clear framework for crypto in the US. With the government back in business, that regulatory logjam is set to break. While regulation was once seen as a threat, the industry is now so large that clear rules are widely viewed as the gateway for huge institutional investment. This is all redefining Bitcoin's role. It's no longer just a conversation about hedging inflation. It's now making a powerful case for itself as a hedge against systemic political dysfunction. This shutdown was a live stress test, and the outcome is a strengthening consensus that Bitcoin could be an essential asset for preserving wealth in a world where the old certainties are fading. Its scarcity and independence are no longer abstract ideas. They're becoming practical solutions to very real problems. So, what's the big takeaway here? The government shutdown wasn't the main event. It was the catalyst for the Bitcoin reset. It kicked off with a hidden liquidity drain that put temporary pressure on the price and shook out the weak hands. But under the surface, it caused a serious and lasting crack in investor trust in traditional systems. The end of the shutdown then unleashed a wave of liquidity into a market that was primed and ready to see Bitcoin in a new light. This isn't just another bull run. It's a fundamental repricing based on a new understanding of risk and safety in the 21st century. The political theater in Washington may have inadvertently created the perfect storm for a new crypto future. The real question now is not if Bitcoin will become a cornerstone of the new financial system, but how quickly. What do you think? Was this shutdown a real turning point for how investors see Bitcoin? Drop your opinion in the comments below. And if you want more deep dives into the forces shaping crypto, make sure you like this video, subscribe to the channel, and hit that notification bell so you don't miss what's next. Thanks for watching.